Welcome back, traders, to my YouTube channel. I hope all of you guys had a great weekend and are ready for the markets this week. So I have a few setups I would like to share with you guys, starting off with GBPUSD. Now, as you guys can see, on the daily time frame, we have this boxed off zone with this ranging market. We don't have a clear directional bias right now, considering we were pushing towards the upside, but at the given price action, we've just been consolidating. Now, this has been happening for the last 2 weeks. So we have a double doji formation forming on the weekly time frame, which could indicate a potential loss of momentum towards the upside. So dropping down to the 4-hour time frame, I've just made the box a bit more clearer. You guys can see how we took in consideration this wick right here and these support levels at the bottom, the rejections. Now the same thing at the top, we had a rejection here and wick rejection here and 3 or 4 wick rejections over there. So what I'll be looking for on a GBP USD is very, very simple. I'll be either waiting for price to come down to this support level or to this level of resistance, and then once it reaches either one, I'll be looking for either a break towards the upside or a rejection towards the opposite side. So if we are coming up to this level of resistance, I'd either be looking for a break scenario or a bounce scenario. Either way, I'll be prepared to take a trade on GBP USD. This is a very, very simple trade. You're just trading the ranging market. So once it comes here, you're either looking for wick rejections like how it happened previously with these candlesticks towards to look for a position back towards the upside, or if it happens to reach the level of resistance, the same thing, you're looking for rejections, especially wick rejections, something like these. Okay, and if we were to enter off of the rejection, we'd be looking to make around 150 pips would be our target, and our stop loss would just be somewhere around this area, giving us a nice 1 to 6 or maybe even a 1 to 6.5 risk reward ratio. We'd only be really risking 23 to 25 pips for potential gain of around 150. So obviously this trade is only valid if we can confirm a rejection and we actually enter off of a trade once we see something like this. Okay, so once we see double doji rejections or a bearish engulfing or something like that, that would be our indication to go enter that sell position. Now the second setup I want to share with you guys is a GBPCAD. Now on the daily time frame, we have been in an uptrend and we have been pushing up higher and higher. However, with the current market and the current price action, I noticed that price is starting to gain some bearish pressure and some bearish momentum, especially if we were to drop down on the 4-hour time frame and look at market structure. You guys can see, if I were to go on the line chart, we have our higher high right here, higher low, higher high, but then price came down to create a new higher low right here, and so we pushed down to create a new lower low, and price is now trading at this level of resistance. So if price can confirm and close below this level, this zone right here, we would then be looking for a short opportunity to look for that third impulsive move towards the downside. However, if price continues to push up higher, our next level of resistance is going to be around here. The reason why I have this line drawn on is because we have some wick rejections right over here acting as a level of resistance, and then multiple wick rejections right here acting as a level of support. So if price happens to continue to push towards the upside, I'd simply delete this zone. I'll be looking for price to come up into this level, as to which we will be looking for a short position, and our targets would be somewhere around here. So we can look for price to come back down to these lows, and our stop loss would just be around this area, which would give us a 1 to 5 risk reward ratio. And if that's a 2% risk, we're looking to make around 10% off of this trade. Okay, so this is GBPCAD. Now the third setup I have for you guys is on EURJPY. EURJPY has been pushing up higher and higher. So we've just been pushing up higher, and there's no indication that the bears are starting to step in or starting to gain pressure over the bulls. So there's no reason to be looking for a sell position at the given time. EURJPY, we see this level of resistance has been holding for quite some time, and then we finally broke towards the upside with a strong bullish push right here. Now with this push, we failed to have a retest, but price continued to push up higher, and now right here you guys can see we found a top right here. So this right here is the point where the bulls started to, back down, and the bears started to overpower, and we saw price pushing towards the downside. Now what I'll be looking for is I'll be looking for this retest to occur. Once this retest happens, it will be very simple to just enter a buy position, and that's exactly what we would be doing. We'd be looking for price to come back up to these highs, and our stop loss would just be below this level, which would give us a nice 20 pip risk with a 130 pip gain, and which would give us almost a 1-to-6 risk reward ratio, which again would be with a 2% risk, that is a 12% gain. So if EURJPY can play out, that would be phenomenal for this trading week. Now the last setup I want to share with you guys is on USDCHF. Now USDCHF, same thing. We've just been pushing lower and lower. There's no reason to be entering a buy position at the given time. Last week, so prior to last week, we formed an indecision candlestick, and if anything, we would have seen a bullish candle forming here because we had it in indecision candle, but instead we formed a shooting star formation. So that just tells me that the bears are still, in control of the market right now. So what I'll be looking for on this is, obviously I'll be looking for a bearish pressure, as I just explained why we have a bearish bias. On the 4-hour time frame, I'll be looking for price to meet our lows once again, this level, which is around 0.9650. And if we were to just drop down more, even on the 1-hour time frame, we can see that we have this level of support that has been holding. Now on Friday, we did happen to close below this support, but we have to confirm a rejection or another candlestick showing us that the bears are still in control, and we're looking for price to continue to push towards the downside, as to which we will be looking for a sell position with a stop loss of around 8 pips, and our take profit would be around 25 pips, and this is a 1-to-3 risk reward ratio. And this is just a quick scalp, a quick intraday position. As compared to our previous trades, those are more day trading positions. So thank you guys for listening, and hopefully I'll be able to upload one more video for you guys for this week. So thank you guys, and if you haven't already, leave a like and subscribe for more videos and breakdowns like this.